International consulting firm Wood Mackenzie has just wrapped up a renewables conference, its first ever. And I'm going to talk to Alex Whitworth, who's the head of Asia Pacific Power and Renewables, find out what sort of forecasts were presented at the conference. So welcome to the interview, Alex.
Thanks very much. It's a pleasure to be here.
Now, it seems sitting on this side of the pond that renewables installations are accelerating in the Asia Pacific, a lot more capital coming in. And so are we looking at what, another 50%, a doubling by 2030?
So I think probably even more than that from what we can see. So even just the China market is planning to add 1,000 gigawatts, which is in a similar scale to the kind of entire global installations at the moment in the next 10 years. So I think we see China's really upped its game with the announcement of the 2060 carbon neutral target last September. And I think that's also put pressure on Japan, South Korea, and many of the other markets also considering announcing carbon neutral targets. This is quite a big change from a year ago in Asia Pacific, where many of the developing markets especially had not been such active players in the energy transition. So that we see a lot of momentum and a huge new growth area for many new markets, in fact, all markets in terms of renewables.
Is that change the result of stronger policy initiatives and a push from governments?
Well, it's kind of a chicken and egg thing. I would say that many of the Asia Pacific markets have been less pushed by kind of climate change policy in the past, including China, although it is on the agenda. But compared to European governments that are really kind of the energy policy, the core of it is really has been moving towards reducing carbon emissions. Asia Pacific is certainly not in that same situation. But I think what's really been driving this change is economics and the costs of renewables. And I think, we've seen the cost of solar come down. I think everybody's aware, 85% in the last decade. China and other parts of Asia, there's a huge manufacturing base for solar panels, for batteries and other technology. And so flooding the market with these cheap technologies, many of the markets in Asia Pacific actually are still installing a lot of very expensive gas-fired power. And compared to gas-fired power, renewables is beating gas-fired power today by 20% or more in most of the markets. And so any kind of renewables investment you can put in and you can dispatch your renewables power instead of gas, you're saving a lot of money on imported LNG or other gas. And so I think that is a huge driver. And in some ways, the kind of carbon neutral and emission reductions and renewables targets, the governments are piggybacking on this kind of economic trend and technology trend. And so the energy transition is moving ahead even. And I think the governments are scrambling to catch up, to put the right policies in place to make the market stable, to make them sustainable, and to see them accelerate in growth without these big ups and downs that we do see in some markets.
I'm curious, Alex. We keep hearing that there's going to be competition between Asia Pacific, Europe, and North America around clean energy and clean energy technologies, electric vehicles and batteries and so on. And it seems like it all fits in a piece. So if you're going to have electric transportation is on your agenda, you need an electricity system to provide the amount of power that you need. Is that part of the driver here?
I would say definitely it's a driver of the technology development, because all over the world there are large markets opening up for these technologies. And every government hopes that some of that supply chain, some of that economic growth will be in their economy. And also companies from different parts of the world are all pushing into that space. And it's like electric vehicles, it's extremely competitive. Now, and in terms of the competition at the moment, I think each of the domestic markets have their champions. I think especially the US, China, and European markets as well. But I think it seems to be coming down to more the US and China, because these are two markets that have a lot of scale, a lot of resources to throw at this. And I think it's still unclear because we see in the power markets, especially, the power markets are dividing between China, which is the largest market in the world and the most rapidly growing in terms of absolute scale, and the rest of the world. There's all of the equipment manufacturers we see in the rest of the world are kind of global, including a lot of European and US companies here operating in other Asia Pacific countries. And then the China companies are very dominant inside China, but moving out in terms of construction of power plants or exporting equipment. Some areas they're doing well, like solar and battery. Other areas they're not doing so well in terms of exporting, for example, vehicles. So I think there is a lot of competition, and it makes it very exciting to be in the space. And I would say what we've seen in China, where I'm based in Shanghai, is that the government has seen these big challenges with the US in terms of competition and blocking access to export markets or overseas markets. And what they've responded with is saying, okay, we're going to build up a very large domestic market to kind of incubate and develop these technology champions, have a very competitive and large domestic market for electric vehicles. I think over 1 million vehicles last year, either electric or hybrid. And then saying, okay, we're going to encourage Tesla to come in, a lot of international companies coming in, but also our local players, and then have a big kind of ecosystem here, which the Chinese can in some ways kind of manage and also give space for their domestic players.
So is the story changing around coal? I mean, it's not that long ago we were talking about, coal increasing its footprint in Asia Pacific, but is that about to change?
Yes, I think it's already changed very significantly, the attitude towards coal, I think from about 5 years ago. In China, I mean, it all kicked off with the air pollution issue in China, which is a very serious air pollution, not so much for climate. But now the discussion, the air pollution's air quality's improved a bit, and now the discussion is going more to carbon. In most of coastal China, you cannot build coal plants. But I have to say, China still has a very significant pipeline of new coal plants, and then also other Asia Pacific markets, including Japan, South Korea, Indonesia, and Vietnam are all building a lot of new coal. So I think the question mark is, if this pipeline that we see at the moment of over 200 gigawatts, if it's going to be, after that, is coal going to continue to be built? Our view is that yes, there still will be coal plants in the future, more efficient coal. But if you compare the level of investment going into coal, it's very small and getting smaller. Well, it's not very small, but it's getting smaller, and it's very small compared to the renewables. So we see about $800 billion in the next 10 years going into renewables, and less than 200 billion going into fossil fuel, including coal and gas. So there's 4 times more investment going into renewables, and that's going to allow Asia Pacific to peak their kind of power sector carbon emissions by about 2025, we think, at a level much, much lower per capita than US, Japan, or Europe. So I think in terms of the energy transition, in terms of carbon emissions per person, Asia Pacific is already leading at a relatively low level of development, and in terms of quite a low carbon, a less carbon intensive power sector.
With all the coal that still exists and the coal that's being built, will carbon capture and storage play a big role in helping those countries meet their climate targets?
I don't think so in the short term, like the next 5 or 10 years. It's more of a pilot period. As we get closer to the 2050 or 2060 targets by some of these countries, it's quite likely that CCS will be on the table as one of the options. But at the moment, the governments are looking for growth areas, and they're not in a big hurry to push up generation and power costs. So as I mentioned before, there's a big move towards, there's still a big pipeline of coal and a big move towards renewables, which is actually decreasing the cost compared to gas, some of the more expensive options. And then I think CCS is going to be likely more expensive even than gas, and that's not it's difficult to deploy on a larger scale at the moment with the economics the way it is. And then it's the big question mark is, where do you put all of the carbon dioxide? That's a question that hasn't really been solved yet. So I think there are people looking at this. China's, doing some work, different countries, but I think what we've seen in terms of decarbonizing the coal fleet is interesting moves in Japan about co-firing with ammonia, so green fuels, either hydrogen or ammonia. There are different targets for different projects, but maybe looking at maybe 20% of these green fuels mixed with coal in the 2030 timeframe. And that would allow these kind of emissions intensity of coal plants to go down, still getting the economic benefits of coal and dispatchable power and more reliable, and then also helping to hit those 2030 carbon dioxide reduction targets.
Final question, Alex. There's a lot of conversation right now in the United States about the modernizing the American power grid. It's a little creaky these days, needs some upgrades, especially to handle the expansion in renewables power. Is the same conversation going on in Asia?
Yeah, I mean, there's these huge power blackouts in Texas. Everyone's been talking about them, but we've had our share of power blackouts and price spikes in Asia, in Japan in January, in Taiwan, a big blackout a few months ago, Australia the last few weeks in Queensland, a very big blackout with a huge power price spike of 100 times the normal power price. So reliability of the grid is a huge issue. And we've seen a greatly expanding interest in battery storage and gas power in the last year due to this. But I think also, in terms of upgrading the infrastructure, there's a realization that this is quite a large cost. It's not really covered when you invest in a solar plant or a solar farm or a wind farm. You don't account for all the costs of the grid. Australia is seeing serious problems. Some parts of the Australian grid at the moment just cannot accept more renewables, big problems with curtailment. And we see the investment in new renewable energy in Australia actually going down in these few years because of the financial challenges and the curtailment challenges. So I think all of that is to say that we see increasing focus on power transmission and distribution, grid planning, and then who pays for the grid upgrades to unlock more renewables. And we've actually seen a very interesting trend recently is that the cheap renewables, people are less interested in those very cheap renewables in distant locations now. They become more and more interested in offshore wind, which is hugely expensive, but closer to demand centers, and also distributed solar, which is also more expensive. But if you're close to the demand center, you don't have to worry about the grid kind of transmission over hundreds of kilometers so much. And also you can kind of have a higher power price if you're near the demand market. So I think those are kind of, we see about half of the renewables investment in Asia Pacific going to closer to these demand centers, as opposed to the last 10 years where a lot of the investment went to these very cheap kind of desert or kind of distant areas with cheap renewables.
Alex, thank you very much. Really appreciate your insights.
You're welcome. It's great to talk to you.